So Bitcoin just hit and broke $100,000 a share. I wanted to do just a little chat with you guys today about talking about how these psychological levels can both be relevant in the short term and then completely irrelevant in the long term, right? It's a human trait to say $100,000. That's a big deal, right? Oh, it's 100,000, it's 100,000. Knowing that really from when it hit 99,000 and then pulled back, and now it's gone up 1%, right? The thing is that these numbers, although insignificant in the long run and won't be a valid trading strategy overall, can give us a little bit of edge when it comes to looking for particular numbers to go through. And this applies to day trading and swing trading and all of that. So let's actually just pop into it here. We're going to make this a little bit bigger here and just take a look at this here. So I have two examples. I've got one from Bitcoin here and I've got one from the stock world, right? So we came up to 99,800 according to this exchange that I'm looking at right here, backed off, spent a couple weeks under this number, and then now we broke through. So anyone who's been following me knows that I sold most of my Bitcoin in the 95 to 92 area. Took another little trade right through here as it came through, but I'm already selling that out. That's just a little scalp, but still hold some. But the reason that I did that, and the reason that I got out from what was happening there is the fact that psychological numbers can become magnets from both sides. So, for example, if everyone in the world is talking about 100,000 on Bitcoin, which everybody in the world was, this kind of action is exactly what I would expect, right? There are people out there who put their order to sell at 100,000. So then people are going to front run that and they're going to short before 100,000. They're going to use that as a stop loss, right? If I can short at 100,000 and I can put my stop loss at 101,000 and play that game as it goes through that price, then I'm going to do that. And the people who did that got rewarded. You get nearly 10% move down at that price. Hopefully they took profits and then away they go. And you'll see this not only from long-term trading, but even for day trading. For example, you'll see many times the stock really, really strong in the day and it gets up to roughly $50 a share or some big psychological whole number and then gets pushed down. Another thing here is the other example I have is Amazon. AMZN. There you go, Michael. I need more coffee this morning. That happened right here. This was actually Jeff Bezos, but you can see hit $100 or $200, oscillated around that price before selling off. When it got back through that $200, that was a really good breakout that occurred there. Now, again, why does this happen? And it happens because even though a lot of people will try to tell you that the market is 100% robots now and that's all algos and there's a giant algo that controls the entire market and all kinds of craziness that people try to feed their followers. The actual reality is that humans control most of the market. So what will happen is if everybody, like for the Bitcoin example, says, hey, it's going to get to 100,000, I'm going to sell, you're going to have resistance around that area. If everyone says, oh, $10 is a really good buy for this stock, you're going to have support around that area. And even if people aren't out there saying it, if they're just doing it, think of someone who's not as into the market as we are, somebody who buys a stock because they heard a tip from a friend and then they go and they put out a sell order and they say, hey, if it gets there, I'll be happy, right? They're on the golf course with a buddy. They say, oh, look at this biotech stock. I think this thing is going to change the world. They go, they open up the Robinhood app and they buy some. And then they put out an order and they say, hey, if this stock gets to $10, that's where I'm out. They generally won't put $9.73 a share. They'll put out $10. Get me out when it gets $10. So what happens is you have this crowd mentality of human beings just liking whole and round numbers. They just feel good to us, and they will put orders out in those particular places. If enough of those people do that, it creates these kind of natural support and resistance points. So that's why this matters in the short term. Why does this not matter in the long term? Because you fast forward 6 months from now, and if that stock is doing good, it's going to blow right through all those people's orders that had an order at $10, and it's going to be at 12, right? If the stock is doing poorly, it's never going to get to that $10 and it's going to fade. So these stop gaps of, not to crap on everyone's $100,000 parades, these numbers, although they feel nice to us as humans, in the grand scheme of things, they don't mean anything. If Bitcoin's going to continue to trend higher, it's going to keep going until it reaches some arbitrary random number that no one will ever know. And then it will have another pullback or bear market or correction or whatever. Same as the stock market, same as individual names, same as Forex, whatever it is. So, yes, these numbers are interesting and they're fun. Just don't get too caught up in them, I guess is what I'm trying to say here. If you're bullish in the long run on Bitcoin, then great, then you should hold some. If you're bearish, you should be short some, but you should do it based off of some other system than trying to do some type of number that is magic in a way. And also, the $100,000 number or any of these numbers, you got to remember this is very home country bias for you US people. It's been over 100,000 Canadian for a long time, right? I don't know what the yen is at, but it's going to be millions of dollars in yen terms. So just understand that, again, fun. I see a lot of memes online. I've shared a couple of them. It's a lot of fun. And yes, they can be short-term support and resistance, and I've kind of explained the psychology behind that. But in the long run, you need to focus on trends. You need to focus on where buyers and sellers existed in the past, not necessarily, again, these psychological type whole numbers.